So the Mag 7 versus the other 493 companies on the S&P 500. We talk about the Mag 7 all the time, and that's because at one point they made up a third of the growth of the S&P. They made up in terms of market cap something like 20% of the S&P 500. These are the largest companies in the world today. Some of them over $3 trillion. Microsoft, Apple, and Nvidia. They may have pulled back a little bit now from that $3 trillion mark, but make no mistake, these are the biggest companies. And then you have Alphabet, 2 trillion. And, these are huge companies, Meta, $1 trillion market cap. So should you be buying these names now that they have fallen, buy on the dips, or should you be looking at the other 493 companies that trade on the S&P 500? And I guess the easy answer for me, for all of you today, is I think you want to do both. I think you want to have a diversified portfolio. I think you want to own a couple of the Mag 7 names, but you also want to own names in other sectors. Because I think when technology is not doing well, or the big cap tech names aren't doing well, you can now, hopefully, the other 493 names can pick up the slack for these 7. First chart we have here, which shows exactly, I think it's actually one of the best charts that we have. It shows that the Mag 7, how they're trading. You can see here on a PE basis how they're trading. Actually, this is Mag 7 versus the market. The PE will be the next one, but you can see here how the Mag 7 is trading versus the rest of the market, and you can see how much the Mag 7 has come down versus the market. It's led the market to the upside and has led the market to the downside. Next chart here is the one I was referring to, the PE of the 7 stocks that make up the Mag 7. You can see Tesla, which probably hasn't had the best performance in the last little while. They are at the top there, so their PE ratio is still pretty high, but you can see a whole bunch of the stocks in the middle there with roughly the same PEs, Amazon being one of them, for example, Apple, another example. And then you see a couple of names below that. You could see Google and Meta. So for me, as I've said on our show many times, out of the Mag 7 or the big the big tech names, I think you can own, take a look at a Google or a Meta. To me, these names make a lot of sense. They're growing earnings by quite a bit, high percentage, and yet their earnings, even though their earnings are going up, their price isn't matching. And so to me, these names now represent pretty good value. You can, take a look at some of the individual names. Let's take a look at some of the charts. I think we have a chart on Tesla first. Let's take a look at a Tesla chart. You can see there, Tesla coming down. A lot of people asking me about Tesla. Do I think it's a good buy at these rates or at this level? And to me, I would say no. And the reason being is for the chart we saw before this, that it still is quite expensive. Next chart we have here is the one on Apple. And again, Apple growing their earnings probably high single digits, 8-10%, yet their stock is trading at over a 30 multiple. So would I be a buyer of Apple? Probably not. I think it's a little too expensive. I think a lot of people would agree it's too expensive. Yet the question always is that premium you're paying for buying the shares, is that justified based on, based on the company, based on its products and how many people use their products? The next chart we have here, coming away from the Mag 7. So those are 2 names of the Mag 7 that I wouldn't be a buyer of. I discussed already some of the names that I would be a buyer of, like Google, like a Meta. But what would I consider as part of the other 493? Well, first stock we have here is a name in the pharma space. We have Pfizer. Now, Pfizer for a little while there was paying like a 6.5% dividend. Well, finally, the stock has picked up. Well, actually was over $31 a share only just a few days ago prior to the recent pullback and scare in the markets. Now it's trading just under $30 a share, as you can see when this chart was taken. But a name that I think has tremendous potential, getting into the weight loss area, in oncology, still does some COVID vaccine. But now you'd be a buyer of Pfizer based on its cancer drugs, its it's weight loss drugs. They're actually trying to come up with a pill to that people could take to bring down their weight versus the injections that they have now. So Pfizer trading pretty cheaply, a name that I would consider. Next chart is at JP Morgan. JP Morgan, as I said, I like Bank of America a little bit better, but JP Morgan has had a bit of a pullback now. It's another name that I think if you owned as part of the other 493, it'd be a pretty good balance, pretty good diversification to the tech names. And it's a name that I've owned for individual investors for quite some time. And to me, it's a name that I think you can get behind. Largest bank in North America, really, and a name that I think that still has room to run, especially now that it has declined over the past, well, let's call it last maybe week or two. The next name we have a chart of United Rentals. We can pull that chart up. Now, United Rentals is interesting. Not many people know about United Rentals. It is a name that basically they're in the heavy machinery business, like a Caterpillar, except they rent their machinery rather than Caterpillar who sells. I believe Caterpillar also rents machinery as well. Caterpillar is all over the world. Caterpillar actually produced some pretty good earnings just in the last few days. Stock went up tremendously, I believe, just yesterday on Tuesday. And Caterpillar is a name that I think you could take a look at. But United Rentals is trading actually a little bit cheaper than Caterpillar. And it's a name that's had a fantastic run, making new highs from time to time. Its business is primarily in North America. And as you can see here, has pulled back recently, although last we took this the snapshot of the stock was up about 3% on the day we took it, just a few days ago. I think actually yesterday. And overall, it's been a name that I think you can take a look at for a good diversified portfolio. So Mag 7 versus the other 493. Well, I think you need to own both. I think you need to own some of the Mag 7 that makes sense from a valuation standpoint. A lot of them have come down in value. Maybe even look at a Microsoft. Still trading at high multiples, but growing very quickly. Meta, Google, and now maybe NVIDIA. NVIDIA has come down 20, 25% from its highs. Still not a cheap stock, but a lot cheaper than it used to be. So you want to buy some of the Mag 7, some of the big cap tech names, especially if you're looking for growth. And then you want to fill out a portfolio using the other 493 names of the S&P 500 to have a nice diversified portfolio.